Welcome everyone to Banana Bread Trades. My name is Goose, and in today's video, we're going to talk about leverage in these prop firm funded accounts and why you are probably using way too much leverage and causing yourself to have a lot of reset and eval fees every single month. And it's kind of a dirty trick that they play on you because they lead you on with that you should be using this much leverage because it is $100,000 or $150,000 account, when in reality, you don't actually have that much money to play with. And let's just go ahead and jump right into the numbers. And the reason I make this video is because as traders, while it is really awesome to make a lot of money really quickly and the potential is there, it's also not statistically likely. So for us, it's important to keep those accounts alive and get them off to a really good and safe start. And once you have a great amount of money kind of accumulated and saved up, then you can apply that leverage. But to start off here, you really have to be careful on how much risk you're actually putting on. And so what I mean by that is, let's say that you got a $25,000 account from one of these trading prop firms. Okay, well, when you trade, and any great trader will tell you, and we even had a professional broker come into our Discord and give us a talk a few days ago, and it was really nice to hear him confirm kind of what we've been preaching in the Discord as well. But even these professional multi-million-dollar traders with $20 million in their account, when they take a trade, even though they're using an insane amount of leverage, to them, when they take a full stop, a full hit, they are only at max on any given trade risking 5% of their account. Okay? So yes, while it may be an astonishingly big loss or win for them, if they do lose, it's only 5%, which in turn means they can lose a lot of times in a row. And what does that also mean? It means that they have a lot of potential to get the wins, right? They're leaving themselves rooms to be wrong. And it's okay to be wrong. Trading is a statistic, right? We just need to be statistically more profitable than we are not. So when you take only a 5% loss, right, you can lose however many times in a row for that account hits zero. But really, if you lose 5% divided by whatever your account is, you should have some winners in there somewhere. Otherwise, your risk to reward ratio is just really, really bad. So we break this down. We have our $25,000 account, and to that prop firm, right, because they're a trader as well, they are risking 5% of their account by letting you trade it, right? So they're letting you risk 5% of their account, which is $1,250, right? That is 5% of $25,000. Now, most of them are actually closer to $1,500, but just for this example, 5% of 25,000 is $1,250, right? So we're just going to not worry about that extra $250 that most of these accounts actually allow you to risk. They're being a little generous and letting you use more of their account. So for us, the now funded prop firm trader, we do not have a $25,000 account. We only have $1,250 to work with, right? So if we had a $25,000 account, we could risk up to $1,250, which, I mean, that's a lot, but at the same time, it's only 5% of the account. You can afford the loss. But we can only lose $1,250 before we lose the account and the ability to trade in that account. So we can only trade 5% of this $1,250, right? So we have a much smaller margin to work with than what's actually implied. And 5% of $1,250 is $62.50, which is not very much. That means you have to start small. You have to start small in order to give yourself the chance to be wrong. So what does this mean? That means you're either taking incredibly tight stops, which is very hard because if you are trading on a prop account, that most likely means that you are not a professional trader, right? None of us trading these accounts are professional traders. We're still trying to make it as professional traders. Now, don't get me wrong. I like to trade Apex. I have 20 Apex accounts. I can use a lot of leverage and it makes a lot of sense. But to the majority of people, right, if you're just trying to get your first prop firm account funded, you're not a professional trader. So don't put this game on hard mode, because even for the people who have been doing it a long time, and there's people a lot better than me doing this, right? They give themselves space. So why shouldn't you? Why shouldn't you give yourself space and time to be wrong? So keep that number in mind that, okay, I lost $62.50. I need to cut the trade around $62 to $75, right? In that area, the trade needs to be over. Otherwise, if you take too many of these big stops, your account's done, right? But let's say you get a couple wins, right? You have some 10 and 15%, maybe 25% wins, right? Well, now your account's getting bigger and you can start to risk more. But you can't really start to risk more until your account gets to those appropriate sizes. So just allow yourself at the beginning of these prop firm challenges to just give yourself the space and the time to get that account grown to where you can actually start trading with some size. And that's really the most important part of these prop firms, that, I mean, it makes them a lot of money in those reset fees, right? Because people look at this $25,000 account and think, oh, hey, yeah, I should be able to trade with a mini for sure. Well, $62.50 with a mini goes by very fast. Heck, $1,250 with a mini. I mean, that's not a lot of stops to hit that number, right? So just give yourself the time, right? Trade with some micros, build that account, get 1 or 2 weeks down the road, right, of just getting some nice consistent wins. Build that account up, and then you can start adding another micro and another micro and another micro. And heck, after 2 months, who knows where you'll be at? And you'll be able to really trade with some actual size. But you just have to allow yourself to get there. And I mean, that goes the same with $100,000 and $200,000 accounts. It says $200,000, but really your account is whatever your available drawdown is, and you have to base 5% off of that. And let me also end this with, this is not financial advice. This is just me trying to help you keep that account alive, because as traders, that is the most important thing at the end of every single day, that account is alive. I don't know how many times I've done it. I don't know how many times I've seen people do it where they have that one bad trade and they just kind of tumble and grenade themselves because they were just using way too much leverage. They didn't allow themselves the time or the space to be wrong. And that's what I want you guys to do. I want you to use the time and the space to be wrong. Because trading is hard. You're watching this video, so you're probably not an expert. Because if you were an expert, you wouldn't be following some finance page on YouTube that had 500 subscribers, which I appreciate you doing. I love you guys all very much. But trading is hard. Don't put it on hard mode. Use less leverage and keep that account alive. Because if you keep that account alive, 3 months down the road, just because you traded small, kept it alive, you're going to be so much further ahead than if you blew the account 3 times just trading too big, right? Because every time you blow that account, that is another wasted month in time trying to get another account funded. Just take your time, and in 6 months from now, I swear to you, you will be so far ahead, and you'll be like, wow, I'm so happy I just took the time and did it right. So thank you all very much for watching the video. I'm sorry for my little rant. I just want you guys to win because I care about you. I love you. And man, I love trading. I love talking to you guys. So again, if you have any other questions or you want to chat, come join the Discord. There's people in there all the time, other than just me, that are really smart, talking trades all day long. Come hang out, talk about leverage, talk about whatever. And yeah, thank you very much for watching the video, and we'll see you in the next one.